Hello, my name is Noah Knightlick. I'm a licensed investment banking analyst, and welcome back to another video. Today I'm going to teach you how to find the beta of a private company. The reason you need to find the beta is so you can calculate the cost of equity of the company to find your weighted average cost of capital. So let's get started. Finding the beta of a private company depends on comparables of public companies. So I have here a hypothetical sports company called ABC Sports Company that's private. And then we have three comparable companies. The way we do this is we find each company's beta, total debt, market cap, tax rate, and then we unlever that beta. The first thing I want to do is highlight the name of each company here, go to data, and then click stocks. Excel will then look at each stock and provide data to us that we can use to calculate our betas. So for Nike, I'm going to do equals and then the company dot beta. I'll press equals and we get a beta of 1.12, and I'll drag that down so we have betas for each company. For total debt, I go to Yahoo Finance here. You search up Nike, and then you click on the financials and then go to balance sheet. Once you're on the balance sheet of Nike, you can scroll down and find total debt right here. So we'll take this number here for the most current year, 2025. I'll copy it and I'll paste it into our formulas here. We can format it, and then I'll do the same for the other two companies. Once you have your total debts in place, you then want to find the market cap of each public company. The way I do this is by going to Yahoo Finance again, and under summary, you can find market cap right here, 65.844 billion. So I go here and I put 65.844 so that it's in the same units as our total debt. I'll then fill in the same for Lululemon and Adidas. And then the last thing we have to do is find the tax rate. To find the tax rate, we go to financials. We go down our income statement to tax provision, 639, and we divide that by pre-tax income, 2,889. We do 639 divided by 2,889, and we get a tax rate of 22.1%. I'll then do that for Lululemon and Adidas, and then we have all of our tax rates. Now all that's left to do is unlever each beta. So I'll do equals our levered beta of our public company divided by 1 plus parenthesis 1 minus our tax rate parentheses times our debt divided by our market cap. I'll then close parentheses. We now have our unlevered beta. Our unlevered beta is the movement compared to the stock market once we remove the company's capital structure. I'll then drag down that formula so we have our three unlevered betas. And then we'll find the average of those three for our ABC Sports Company. Next, we have to re-lever the beta to our client's ideal debt to equity structure. So we'll do a 60% debt and 40% equity weight. Depending on the company and client, this will be given. Our tax rate will be equals the average of our three tax rates up above, just for this example. And then we'll re-lever our beta to our private company's ideal capital structure. So we'll do equals our unlevered beta times 1 plus 1 minus our tax rate times our debt divided by our equity. Close parentheses. And we now have our levered beta for our private company. You see that they have a really high debt to equity capital structure, so the beta is highly volatile. If we switch this to 40% and 60%, you can see that the beta drops. So you can see as debt or leverage increases for a company, the amount of volatility versus the market will also increase or decrease. And that's how you find beta for a private company. If you enjoyed this content, make sure to like and subscribe to the video. Also, we offer a free 3-day investment banking course where we'll teach you how to put together a full financial valuation model just like I do as an investment banker. Click the link in the description to join. Thanks for watching, and I'll see you in the next video.